All right, welcome back to another week with Steve and I as we do some just some overview of the markets, just some ideas of things that we're looking at. Just to be very clear, this is not specific trade recommendations, as everybody's got unique stop loss and risk tools for each individual person. But this is just some ideas that we're looking at. If you want specific trade information or recommendations, you can simply just reach out to us. As we all know, everybody's got a unique risk tolerance, so it's tough to give specific trading advice. But real quick, Steve, as you and I were just talking about the S&P 500 and today's action, why don't you go ahead and I pulled your charts for you and start with the S&P 500 here.
Yeah, these first few charts that I plan to talk about are things that we discussed in our last presentation about 10 days ago.
Yep.
And I just wanted to kind of do a little follow up on what we talked about last time. This is the chart of the S&P 500. You can see that today we made a new all-time high. And this happened early in this cycle. So in the last video, I probably mentioned that we were approaching an intermediate cycle low. And so we are early in a new intermediate cycle low and a new daily cycle low. And you can pause the video if you want to study this chart a little bit more, but we are on day 7 of a new intermediate cycle low. We're only in week 1. So we're early in the cycle and we're breaking out now to new all-time highs. And kind of the rule with cycle trading is that cycles that break out early in the cycle tend to run for a long time. So I know most of the news that you're hearing from all the experts is telling you that we're going to have a weak market or a correction. I've heard all kinds of negative news, but the chart's not reflecting that. So that's we're still early. If you wanted to place a trade here, we're still early in this cycle, and it'll have many, many more weeks to go. These cycles normally last well over 20 weeks before they peak out. So we're early, and a trade in the stock market right now would probably be a good thing to do.
It's fantastic. Well, let's go ahead and take a look at oil here. We had quite the intraday drop today, as you can see. What were your thoughts of the oil markets right now?
Again, if you went back and looked at the chart that we showed 10 days ago, we were right at that resistance level that I've denoted on this chart. It was drawn in the same place. And I warned then that breakouts that happen late in a cycle typically don't hold. And so here we are, we're in week 19 of this oil cycle. And I warned that we were late in the cycle, that if you get a breakout here, it might not run very far. And sure enough, it's turned much lower now. And my guess is it's probably going to try to seek out a intermediate cycle low, so it could still drop quite a bit further.
Yeah, I see you got that uptrend line down at the bottom there towards that 68 marker. So I can see it. Well, this kind of volatility, I mean, you got 68 to 80 and happening in, a week or, week and a half or so. So whenever things are that volatile, usually, the quicker things move up, the quicker they move down, So, all right, let's go and take a look at your next one, gold, one of my favorites. What's your take on gold right now?
Yeah, in the last video, I was pointing out that gold appeared to be trading in a triangle. It is now broken out of that triangle, and it's going to make a run for the all-time highs again, I suspect. 2,800 shouldn't be a problem for it to do. Right now, gold is on week 16, and so we are probably starting to get towards the late end. If we can get a breakout above 2,800, again, it would be kind of like oil. It would be where you probably need to be tightening up stops. So late in the cycle, you want to control your greed. I know a lot of people start getting real excited when you get these breakouts.
Yeah.
But that's really when a good trader starts controlling greed.
Yeah, you make a good point about that, the greed factor, and then the emotional part that we all go through. And, it's a 50-50 call. You never want to get in the way of your clients. And it's a tough situation for us brokers, I should say. And you and I have talked a lot about this. We don't want to get in the way of our clients, but, profits are profits. And I always make a quote, you never go broke taking profits, but you can also miss out on a continuation of a move. So it's a tough call for us from time to time.
Well, it's kind of like on that stock chart that we showed at the beginning of this presentation. Breakouts that happen early in a cycle, you've got to control your fear, because most people, when it's early, maybe they don't believe that it's going to run very far, and kind of like stocks, they've been in a decline for a couple months as it found its way to intermediate cycle low. By the time you get down there, you probably feel kind of beat up. You don't really believe what the chart's telling you. You're like, I think it's going to keep going lower. And of course, that's what all the commentators were saying too, right?
Yep.
And so at the beginning of the cycle, you got to fight your fear because getting into a new position, you're afraid that it's going to fail and you're going to lose money because it's been going down for so long. But late in the cycle, you got to control your greed because you think it's going to keep going up forever. Yep,
exactly. No, I've been there many times. I know you and I are not perfect. We've made mistakes trying to control and manage it. It's something we've learned to learn behavior over time. And like you said, those commentators, when I start seeing headlines, we all know Kramer and when they start pumping markets, that's when I get a little nervous for that market. I'll start taking some risk off in situations. Right. But it's a tough one. But yeah, when I see Twitter or X, pumping markets and everyone's going nuts and to the moon, I start, watching a little bit. So let's talk about agriculture a little bit. In the last video, I mentioned that it looked like there was a extremely wide spread between the dollar and the real. And I mentioned that whenever that changed, that it should help the grain markets. And right now, the grain markets have been on a roll now for the last couple of weeks. And this kind of falls into the normal seasonal patterns. Usually January, February, into the 1st of March are bullish times for grains. That's one of what I think of, that there are typically 2 to 3 bullish periods of the year. And we're in the main one right now. This does not override the fundamentals, which are all pretty weak. So, however, if the dollar drops into an intermediate cycle low here, it should strengthen the real, and it'll make corn and soybeans more competitive in the world. So it should help our exports. I don't know what Trump's going to do. I don't know if he's going to slap on tariffs onto China and things like that. We don't know that yet. But we do know that we're in the grains were extremely oversold, that the funds are now lifting their short positions, which means they are buying, and that's creating this rally that we're seeing in the corn and beans. So this bean chart, beans at the last presentation that we had made, Drew, had just broken out from that long trend line. And so now we are up against the 200-day moving average. I expect that we're going to break through that again. We're still relatively early in this cycle. So it's only about 3 weeks long. So we're still early. You might see a pullback here from the 200-day moving average for a week. I expect to see it kind of consolidate, maybe some sort of bull flag or something like that. But we could see beans shouldn't have any problem getting to $11, and 12 is not out of the question. If you're a farmer, you have grain in the bin, here's your opportunity to sell it at a profitable level. Yep. So, all right, let's go and take a look at the next one. And I've been watching corn. I know it's trying to get to that $5 area. What are your thoughts on this one? It finally grinded out after being down at those lows for a long period of time.
Well, at the last video that we did, Drew, corn had just approached that horizontal trend line that you see drawn. We've now broken out above it. The corn rally began late last fall. It's been running quite a bit longer than the soybeans have. And so if I were a farmer and I had grain in the bin, I probably wouldn't count on corn going to $6 or anything by any stretch. We're already getting our rally. We've already had our rally. I would reward the market by selling some grain to it and getting some risk off the table.
Gotcha. So what are your thoughts? I mean, I know the tariffs are the big question, and I know Trump in his last presidency made grains go up because he forced China to buy. What are your thoughts on, I guess, some policy side? Do you have an idea of what Trump's going to do? Or, I mean, are you kind of like me? Are we just kind of just, it's unpredictable right now from that perspective? I mean, do you have any thoughts on that?
Trump wants to have a good relationship with China. But right now we're kind of starting over because the Biden administration really reversed a lot of the progress that Trump had made. And under Biden, when Trump was president and into the first year of the Biden administration, the money that farmers were making, the farm economy was the strongest it had ever been. In the last year or two, the ag economy is in a deep recession. And so I'm not sure what Trump could do that could make things any worse than it's been the last couple of years.
Yep.
But Trump likes to deal. And I think a lot of the talking about tariffs, people know that he will put on a tariff. Trump likes to use tariffs, but he really doesn't want to have to do it. It's kind of like with Mexico and Canada. He's talking about 25% tariffs there. But I think if they can come up with some border security and things like that, then he won't do it. But Mexico knows that the Trump is serious about getting the border sealed up. And
that and the cartels. I think people have had enough of the border issue and the drug issue, and I think he's going to be putting the hammer down on these guys. So
right.
So all right, sounds good. Well, let's go and take a look at the last one. You got May Coffee here.
Yeah, this is just a for a trade idea, something where it's a fresh breakout. This is the May contract. The May coffee contract typically does well on into the middle of February from this point. And you can see we've kind of got a nice rounded cup, if you will, that's formed. So here's a cup of coffee for you. The coffee, each point's worth about $375.
All right. Let me go ahead and start with this. I'll start with silver. Steve didn't go over silver, and this is our fancy new software out there, guys. So if you have any questions or want a taste of this software, you can ask us for a demo. Steve and I have been getting used to this software last few months, and I know Steve likes it significantly better than our old software. But let's go and take a look at the silver market. Silver was interesting today in the action. I really thought it was going to be breaking out. I thought we were going to be getting over this long term. We got 1, 2, 3, and it really did pull back. I think gold held a lot stronger, but I'm really looking for this thing to try to get above that 32, let's say 32.25 for a couple days and confirm a possible breakout. But still working and grinding to the right right now. Baseline between that 20, let's just say the 29.84 area and this 32, and we've been grinding for some time, but I'm still pretty bullish on silver. I think there's going to be a lot of inflationary pressures, and then also if we get this economy going, we get China's economy going, there could be a lot of pressure put on this market, and also with the tariffs. If he puts that 20 to 25% tariff, that could be quite bullish for silver as well. And that goes for any of the base metals. So let's take a look at copper. Right now we're at 4, and this is end of day. So looks like 433, 432 area right now. kind of a similar pattern, just grinding to the right. We've got that base at 48. I'm sorry, $4 copper right now in that area. So it's got a new upline bullish momentum. So I think, my personal opinion, this is setting up for kind of like a silver, setting up for a possible breakout. So again, it depends a lot on Trump, the interest rates, the economy. We can get this thing going. You could see this stuff really start to take off. Natural gas. This one is funny. The reason I'm bringing this one up is at the beginning, and I've said this before, at the beginning of the winter, the mainstream media was saying it was going to be a warm winter, and we all know it's been a very cold winter. So I was actually telling some of my clients to go and buy natural gas, just doing the opposite of what mainstream media was putting out there. We're currently at 345, and we're grinding up higher and higher. I don't really have a trade right now put in. Risk is pretty high, but natural gas, I think it's just going to probably grind higher. Actually, I know in about another week or two, we're going to have a pattern break. So, this might be it for this run short term right now, unless we can run into some supply and demand issues. But that cold weather, I think, is going to finally be breaking. I follow the weather on the West Coast a lot. They're expecting a rainy pattern to be setting in here in the next week or two. So I think we're going to be going through a pivot change with the weather, and hopefully we warm up here in the Northeast, and you'll see the natural gas probably cool off and just kind of grind here between the let's just say the 320 to the 380 area for right now. But that's what I'm looking at. Let's take a look at the Dow Jones. Again, we really had, Trump came out today, basically just said he wants lower interest rates. Dow Jones responded accordingly, and it just took right off. But I would probably expect this to pull back on a short-term basis, maybe the 43, 740 area back down to these moving average. But again, there's a lot of kind of unknowns. So that's what I'm looking at right now. I don't have specifically have a trade I'm doing in the Dow Jones, other than, could be putting in kind of a lower high, back and fill, and then go recharge and go make maybe new all-time highs eventually, is what I would kind of be looking at right now. So that's what I'm looking at. What are your thoughts on that, Steve?
Yeah, I love the Dow. I love the stock market. As we said earlier, you can see that we're only looks like 2 weeks in on the Dow. It probably bottomed maybe a few days before the S&P did, but the S&P's charging out and leading. But that's a pretty chart right there. If we could get a pullback, something back to the 14-day moving average or something like that. What are you using there, Drew, on that?
I'm using the 15 and a 40. It's just been 15. My go-to. I've been using it for 18 years. I keep it simple. I do my trend lines and whatnot as well, just as you do. But in saying that, I've always kept it real simple. Sometimes I go in I've seen thousands of setups over the years where guys have 10, 15 indicators, and I just know you can get indicators that kind of mix up your brain a little bit. So I try to keep it as clean as possible, kind of like you.
Yeah, I agree. And but if you could put in an offer, I agree with Drew. I probably wouldn't buy it right here, but these things, they bounce around, they move around, and put you in an offer at that 15-day moving average. You might get something at a bit of a discount. Yeah,
and I have to agree. This is another thing too is, and I've been doing a lot more lately, is resting my limits and putting out buy limits and whatnot, and just kind of waiting for the markets to come to me. And if I miss a move, I don't care, but I've been doing that a lot more lately with this volatility, just making sure I have more precise entries than just kind of more of emotional, hitting that market button, So, but sounds good. Well, I hope you guys enjoyed this week. If you have any questions with Steve and his Waves Trades advisory service, you can reach out to him. He's a great trader. If you have any questions for me, you can reach out to me as well. Other than that, I hope you guys have a great trading day. Take care. Bye.